Quick hits, three things that I've seen in the news over the last couple of weeks that I wanted to make a quick comment on. And the first one, I think it's been on many people's radar. Gold climbs to two-week peak as soft economic data cements rate cut bets. Again, the soft economic data is coming from a lot of these private numbers, private payrolls in the US, the Challenger report. This is making us think that the Fed is leaning towards cutting. And when you cut interest rates, the US dollar weakens, good for gold. US markets set for broad year-end rally as AI spending and tariff ruling drive optimism. Not so sure about the tariff ruling. This person that mentioned this in the news was keen on believing that the tariffs would be reversed. And we know that's with the Supreme Court right now in the United States. If they were to be reversed, would that actually be a good thing for the market or maybe a negative thing for the market? I'm not so sure. American consumer sentiment at three-year low with everything that's going on in the US. Democrats not getting along with Republicans, government shutdowns, higher cost of living, businesses slowing down activity. No wonder the American consumer sentiment is at a three-year low. Let's look at our first topic, which is gold climbing once again back above $4,000 an ounce, coming in at over 4,200, I think, this morning. And we have our chart on gold, nice gold bars there, but we have our first chart on gold. You can see it pulling off, and now just at the far right-hand side, moving higher once again, perhaps thinking that, our investors are thinking that the US dollar will weaken if we were to get further rate cuts in the United States. Our next quick hit is the market set for a broad rally, at year end. I agree with that, but not so much because of a tariff reversal. I agree with that because of a couple of other things. Number one, seasonality. November is usually the best month of the year for the markets. We came into November, we saw a bit of a rough patch the first week or so of November, but recently markets have moved higher, and I think we can move higher into year end. We're seeing a lot of spending going on. We know individuals will go out, they'll shop in the US for their Thanksgiving, they'll shop, everyone will shop for Christmas. There's a cheer, there's a good feeling in the air during this time. And I think the markets, even though can and are expensive in many areas, I think the spending that's going on at the business level, especially in technology, I think can drive this market higher. We have a chart of the S&P 500. This is a year-to-date chart, not a three-year chart. And again, you can see how well the S&P 500 has done. Our third quick hit and last one for our show is about the American consumer. And we can put up the chart on the American consumer right away. This is a national sentiment trends, including recent declines, remain fully aligned with the views of independents. And you can see how the consumer sentiment has fallen. And the Michigan Sentiment Survey is the one, University of Michigan survey is the one that we use, or that they report in the US that's most used to see how things are going. And the consumer sentiment fell back about 6% in November, led by a 17% drop in the current personal finances of individuals, and 11% decline in year ahead expected business conditions. So a lot of people thinking that business conditions in the US is not going to improve. A lot of people have less money today than they had a few years ago because of obviously inflation, and so sentiment has gone down. So something to watch as sentiment, if it were to continue to fall. We're already at multi-year lows. I think the lowest we've seen perhaps on record, even with respect to the Michigan survey. If that were to continue, that's definitely going to affect the stock market and affect the spending that consumers do in the US. And we know that the consumer makes up about 70-ish% of overall growth and GDP in the United States.